This morning, I want to take a look at our two top E-mini S&P day trade strategies. SR CounterTrend II version 2 E-mini S&P 1 minute, and then Cobra III E-mini S&P. And here is the E-mini S&P SR CounterTrend II V2. Test well back to 1997. It's a very selective strategy, 783 trades in about 20 years. Average trade profit is 71.63, and the drawdown is 41.75. Here is the equity curve. And I've talked a lot about SR CounterTrend II lately, and this is the E-mini S&P on the 5-minute chart for version 2, and it has the best results between all versions. And we're going to take a look next at Cobra III E-mini S&P, and here it is. This one tests well back to 1997 as well. More trades, 1,284 trades, $75 average trade profit, 77.1250 drawdown. And here is the equity curve. You see a spike recently. This is the non-profit target version. We're going to go over 4 different variations of this, and the 5th variation is something I'm going to test that I haven't done yet. It's not coded, but we're looking at this B version, $600 stop loss, no profit target. We're going to look at the original version, $300 stop loss, $600 profit target. Then we're going to look at both of those with the VIX filter. So we have a VIX playbook of sorts. And so here is the B version, $600 stop loss, no profit target, nice equity curve, but recent drawdown, as you can see here. If you expand this out, it's pulled off that equity peak because recent trade has been more choppy, ranges have been more narrow. This takes incredible advantage of big ranging days. It can capture those moves. For example, back in February, it captured nearly 100 points in the E-mini S&P on one trade and nearly 60 on another trade, just with a simple entry and letting it ride until the end of the day. And so on days where there's less trend, you may go through losing streaks like we have recently. And so it's within the normal drawdown range. We're going to take a look at the original version. I'm going to change this to $300 stop loss, $600 profit target, and you'll have the A version that you see right here. So here is the $300 stop loss, $600 profit target results. You lose some average trade profit, but you narrow the drawdown and same number of trades. We take max daily entries of 1. Here is the equity curve, and we recently had a drawdown here. This is where you want to start a strategy, is in a drawdown if you have the opportunity. And so you see there's drawdowns in the past. These numbers are without slippage and commission, and when you have a day trade strategy, you want at least $50 average trade profit before slippage and commission, because slippage and commission can take out about half of that, $25 to $30 round turn. And so that's what you want to take a look at. The next thing we're going to look at is the VIX filter. What would happen if we used a VIX filter on these? So I'm going to look at the $300 stop loss, $600 profit target version with the VIX filter, and the VIX filter is going to require that the daily close on the VIX be greater than 15, and we require the average range of the E-mini S&P daily chart to be greater than 20. And so we're going to apply that filter to both A and B for a C and D version, and I'm going to set that up and show that to you next. Take a look at this. We're going to modify this version next, and you'll see the change. So $91 average trade profit, really nice boost on that. Decreases the drawdown just a little bit. The net profit as a percentage of drawdown goes down because you don't take as many trades. Roughly 1/4 of the trades, and your total net profit goes down. Nice equity curve. It's been choppy lately, went down. Big volatility. Volatility is getting smashed again, and so we're in that zone where we wouldn't trade because VIX is low, so we wouldn't actually trade this strategy today. And so you see the market just opened, but we wouldn't trade this today because VIX is less than 15. So let's see here. Now I'm going to change the stop loss to $600 and set up no profit target with this filter, so we're trading the D version of this. Now we're looking at the D version, $50,000 total net profit. Same number of trades as the C version. The average trade profit is really boosted way up above the $100 threshold, which is very hard to find in a day trade strategy. Again, this is very selective. You're talking 20 trades per year. Roughly, we're looking at 20 years, so less than 20 trades per year on average. The drawdown is 52.1250. Here is the equity curve. So you see the nuances, the sideways price action, and so you could trade different combinations of this. It's hard to get this over 100 on a day trade strategy. One way to do it is to be selective. Would be very hard to. I would be surprised to see something that has this high of an average trade profit and trades very, very frequently. You know, if you're talking one trade per day on average, I just don't see it happening and getting this much out of it and testing well 20 years, and so that would be hard to find. But this is what we have. These are our two top strategies once again: SR CounterTrend II V2 and Cobra III E-mini S&P, and strategies to use to day trade the stock index futures.